trust actually is a great system. I know people piss on it and they say, oh, it's terrible. I'm like, without it, we'd have still a pretty crappy life. I will argue fractional reserve banking is what created progress as we know it, but okay. But do I like Be My Own Bank better? Yeah. Is it going to happen overnight? No. So until such time that we get there, there's going to be this interim piece of CeFi, and I think Coinbase is doing a great job and others doing a great job. But ultimately, do we all go DeFi? And is it, someone said this morning, every financial transaction in the future will be AI to AI, no humans.
Hey guys, welcome to Everyday Finance. In anticipation of significant changes in financial regulation, prominent investor and Morgan Creek Capital CEO Mark Yusko has highlighted a growing trend among US banks adopting stablecoins and cryptocurrencies like Bitcoin and XRP. Yusko claims that this movement represents a significant change in the conventional financial sector's attitude toward digital assets, showing institutional acceptance rather than opposition. Banks are integrating cryptocurrency not just to keep up with the latest trends, but also in anticipation of a new monetary paradigm in which digital assets will be crucial. Public sector policy and private sector preparedness are becoming more in line as Washington lawmakers draft new crypto regulations. In particular, stablecoins are anticipated to serve as a link between blockchain-based and fiat systems, providing financial institutions with compliance and liquidity. In this regulatory evolution, XRP has a distinct advantage due to its positioning as a cross-border payments solution, particularly if the SEC's ongoing ETF considerations establish a precedent for institutional-grade access. In contrast, Bitcoin is still acknowledged as a store of value similar to digital gold, which is particularly significant given ongoing worries about fiat devaluation and global monetary changes. Yusko stresses that these advancements are not one-off occurrences, but rather signs of a systemic change that will soon make blockchain technology the cornerstone of financial operations. To put it briefly, banks are now integrating cryptocurrency into their long-term operational and strategic frameworks, rather than merely experimenting with it. This could greatly speed up adoption and validate the industry in the eyes of conservative investors and policymakers.
And again, my wife would just say, Mark, you're so damn naive. So literally, the day after we announced the formation of Morgan Creek Digital, got a call from the SEC.
Yeah.
Not exaggerating. The day after. And they were in, and they were on us like white on rice. We hadn't even done anything yet. We had just said, we're going to do this. We're going to raise a fund. Now, I will give them credit. The reason they came in was not to bust our ass. Because this was the regional group. This wasn't the people in Washington who were politicking. They said, right, we need to learn. And they didn't say it as clearly as that, but they were much more about, hey, show us all this, teach us. Yeah. And that was cool. And then it happened again 3 years later, and it was a little even more kind of, okay, we really need to help understand what's happening here. Right. So I admire that, right? If you don't understand something, seek people who do.
Yeah, yeah.
And they had the ability, they can call anytime they want and come in. And so, but when Gensler was in charge, the tone did change. All of that goes to your point. It was a time that was fraught with peril. Now, I was lucky or unlucky. I mean, luckily I started down the path before Gensler. I had to endure the Gensler era. And now everything's switched to tailwind because the new guy is fantastic. And Trump and Team Trump and Eric and all those others are behind it. But I think, to your point, he allowed them to happen because the big boss spoke. And I tweeted about this on June 4th of whatever year that was, 2023, when BlackRock said, we're going to apply, like it's done. There will be ETFs now. Yeah. Up to that point, no way they were going to approve them. When the Winklevoss applied, no way. When Bitwise applied, no way. As soon as BlackRock applied, it was done. It was a done deal.
Point.
And so I think he was coerced into saying, okay, BlackRock says, show me the money. And there's lots of conspiracy theories about why BlackRock wants to be involved, and they're gonna suck up all the Bitcoin, then they're gonna control the network. Like, well, that's not the way it works. They're not running the nodes, but okay. And even if they sucked up all the Bitcoin, and they, Max, and I love Max and Stacy. I mean, I love them. And Max talks about, it's a conspiracy. They're gonna seize them. Like, here's the deal. It's certainly possible that could happen, right? That they could say, you know what? By executive decree, we're gonna seize everyone's Bitcoin. Now, the problem with that is you'd be seizing it not from the bad guys and the criminals, but from widows and orphans and pensioners and But okay, you could still do it. But here's the thing: unless they get 100%, and I literally mean 100%, not 99.9, not 99.99, 100. Unless you get 100%, all the value stays in the chain, and that's what keeps me sane about it, because Satoshi even talked about this. He said, yes, coins are going to be lost or stolen. There's not going to be 21 million. That's all that will ever be mined, but we're not going to have 21 million. That's why it's divisible, because there's trillions of Satoshis. I mean, actually quadrillion, 2.1 quadrillion. So the key is that, yes, stuff's going to get lost or stolen. Maybe the Nakamoto million never show up. Maybe the government does see some. I don't know, but it doesn't matter. He said it, because remember, it used to be he, she, they, but then he self-identified once as a he, so we know it's a he, or some number of he's, but there is at least one he. And he said, consider it a donation to the community. If you lose your keys, and it's so elegant because we've all lost money, right? We've all lost cash, or we've had a bank account we forget about it. But that's different because they just print more. The problem with fiat is, like, there are stories where people, they open up a house and they see all the cash buried in the wall. No one missed that cash because they just printed more. But we know how many Bitcoins are because we have a permanent, immutable truth. And again, the aha moment for me was 838, now 839 years, we've had a trust system. Banking is built on trust. You give your money to a bank because it's not safe to hold it all yourself and carry it around. So you trust them. But I actually have a recurring nightmare, not like every day, but maybe once a year. Go to the bank and punch in my code, because I do have an ATM card, and it says $0. How would I prove it's not zero? I don't have a statement. I haven't had a statement for years. Is their word against mine? Now, I could probably prove, because of old receipts or something, that I used to have money and now they say I don't. But it would be their word against mine. So that trust actually is a great system. I know people piss on it and they say, oh, it's terrible. I'm like, without it, we'd have still a pretty crappy life. I will argue fractional reserve banking is what created progress as we know it, but okay. But do I be my own bank better? Yeah. Is it going to happen overnight? No. So until such time that we get there, there's going to be this interim piece of CeFi, and I think Coinbase is doing a great job and others doing a great job. But ultimately, do we all go DeFi? And is it, someone said this morning, every financial transaction in the future will be AI to AI, no humans.
Right.
Yeah. You know what? A simple example. You get in your car today, you pull up the gas station, you get out, you pump the gas, you take a plastic card and you tap. Are you kidding me? In the future, you won't get out of the back seat, not the front seat. The car will fast charge and the car will pay the machine and you'll drive away. And that's better. Or you get into traffic and you want to go in the fast lane. Okay, now takes a picture of your license plate, sends you a bill and you write a check. Oh my God. No, the car will pay the lane. And so, yes, those AIs will certainly interact, but do I think no human activity will be there? Will there be no human speculators? I doubt it, but maybe.
The current tense standoff between Bitcoin and the resistance level of about $110,000 is frustrating traders and generating conjecture about the reasons behind the stall. Since May 23rd, the price has stayed within a small $3,500 trading range, despite several bullish attempts to break through this psychological ceiling. Analysts blame a wide range of uncertainties affecting the world economy for this stagnation. In anticipation of more definitive signals from forthcoming U.S. economic reports, such as the Personal Consumption Expenditures PCE Index and jobless claims data, which will aid in determining the Federal Reserve's policy path, investors are becoming more cautious about taking on large positions. The caution is exacerbated by rising bond yields and escalating geopolitical tensions, which leads many to take a wait-and-see approach. The liquidity zones that are developing above and below the current range of prices for Bitcoin add to the complexity. They serve as gravitational pull points, making it more difficult for the asset to make a clear breakout in either direction. Don Crypto Trades, an experienced trader, noted that these zones get more powerful the longer Bitcoin remains close to $110,000. Bitcoin's price action is still on the verge of a meltdown as institutional and retail investors continue to focus on macroeconomic data and major events like NVIDIA's earnings and the Bitcoin conference. Although bulls are holding the line at important support levels, the market could veer sideways or even retrace if confidence wanes in the absence of a strong catalyst.
You've done real work on this from the very beginning. So when it first was suggested to me, I went to the source, the internet, and I typed in, who's Satoshi Nakamoto? Curiously, what comes up is Intelligence Central. The name Satoshi means intelligence. Nakamoto is the name of families from the central provinces of Japan. Like, that's curiously close to CIA.
Yeah, yeah.
Okay. So then you dig a little further. Curiously, in 2006 or 7, I can't remember the exact year, I think it was 7, there is a paper sponsored by the NSA, written by Satoshi Sakamoto. You can look this up, like it's true, Satoshi Sakamoto, who was the chief technology officer at NTT in Japan. And it talked about a peer-to-peer cash system. Curious, interesting, okay, interesting. So I dug deeper. I'm like, all right, if you were in charge of the global reserve currency and you saw the writing on the wall that that was going to go away and the only end game was devaluation. And what I mean by that is once you get into debt, you have 4 options. You can pay it back, okay? You can restructure it, you can default on it, or you can devalue it. Can't pay it back. Like you could seize all the assets of every human in America, you couldn't pay the debt. Mm-hmm. Not just their income, but all their assets. You couldn't pay the debt. So paying it back off the table. You can restructure it, like gives people 50 cents on the dollar.
Right.
But someone's got to take the other side. Not many takers for that, but you could try. You could default. Politicians, what happens if you default? You're out. Politicians don't like to be out. I joke all the time, there's no left, there's no right, there's no Republicans, Democrats, there's in and out. When you're in, you do or say whatever it takes to stay in. And when you're out, you do or say whatever it takes to get in. I mean, think about it. Ronald Reagan, not a Republican. He was a lifelong Democrat. He's like, I want in. I'm going to be a Republican. Donald Trump, same thing. I mean, it's in and out. So they're not going to default on it because they don't want to be out. So you're going to devalue it, debase. And that's been the history. Look, there have been 775 paper currencies in the history of the world. 3/4 no longer exist. They all went to zero. All the others are going to zero. Look, the pound sterling, it's called a pound sterling. It's the oldest currency still surviving. It's like 326 years old, something like that. It used to be, for a note, you got a pound of sterling silver. Today, it's like 194 pounds. So it's just been devalued to, cents on the dollar or fractions of a cent on the dollar. So the key here is it possible that, the other one is if you look at Satoshi Nakamoto, Sa comes from Samsung, Toshi comes from Toshiba, Nakamichi, and Motorola. So you could say it was a bunch of tech companies, but I don't believe that one. But the Central Intelligence Agency makes sense to me. Why? Because if I'm the world reserve currency and I see the writing on the wall, what if I got everybody to swap the worthless fiat into this cool asset and then I seized it all out the back door? Now, we're, again, super lucky. We, by happenstance, we have 3 general partners, and then we have a venture partner, and our venture partner is Scott Stornetta. If you read the white paper in the back, there are 8 footnotes, 3 of them, Scott and his partner, Stuart Haber. Scott coined the term blockchain. He and Stuart, this is great. They said, if I lend you money, Aaron, we need a judge to make sure that we keep our ledgers the same, okay? But the problem is, if Mark's unscrupulous, he could bribe the judge to change the number. So we need a judge to judge the judge. Well, then he could bribe both people. So we need a judge to judge the judge. He says, well, we need everyone in his, that's a blockchain. So he was brilliant, Stanford. And so he's got 3, white paper notes. And so I asked him, I said, what do you think of this? He said, interesting theory. Nope. I'm like, Scott, come on. You didn't even think about it. He says, well, no, I did. But the way you're thinking about a backdoor is impossible with Bitcoin because of the air gap. I'm like, but then as soon as he said, but with Ethereum, you could have a backdoor. Whole nother story for another day. But that was really interesting. So is it possible it was NSA or CCP? Sure. I don't think it was CCP because CCP is going down their own digital currency. Look, digital currencies, government digital currencies are evil incarnate, right? I mean, programmable money. I mean, all you got to do is watch Augustin Carstens for even a minute 47, Jabba the Hutt or Kingpin. I mean, not good, right? Of course, we should have the power to control how you spend your money. No, you shouldn't. So is it possible it was, Satoshi Sakamoto and NTT and the NSA? Sure. Is it likely that it was one person? No. Yeah. Do I believe it was 4 people? Maybe, one who passed away, another one who's in jail, and that's why, multi-sig and you can't move. Is it Craig Wright? Hell to the no. But I don't think it matters in that the beauty of the system is that it is anonymous. Like if there was a CEO or if it was a company, that company can be coerced, right? Why does Google get to read all of our messages? Because they were coerced, right? The government showed up one day and said, if you want to be the biggest, you will truncate your fiber. One closet for you, one closet for us. Like, really? I mean, like, all our data you get to see for, what do we get out of that? You get to exist. That's a real story. That's real. Yeah. So is it possible? For sure. I mean, the NSA created SHA-256, right? So, or CIA, one of the two. So certainly possible. But I don't think it matters because once you unleash this system into the world, it's an adaptive biological system. The miracle was it got to $1.
Interesting.
1 to 100, not a miracle. 100 to 1,000, not a miracle. 1,000 to 10,000, not a miracle. The miracle was that anybody used it at all. Tomorrow is Bitcoin Pizza Day. We're going to celebrate. I should remember his name because he is a really, really important person in our history because he proved that you could use this.
XRP seems to be setting up for a significant upswing, as traders are becoming increasingly optimistic about a possible 48% spike that could push the token to about $3.40. The SEC's evaluation of WisdomTree's application for a spot XRP exchange-traded fund, a ETF, which formally started on May the 27th, is a major factor fueling this enthusiasm. Approval odds have increased dramatically as a result of this development, rising from low levels to an impressive 84% on the prediction market platform Polymarket. Strong technical signals and ETF news are bolstering bullish sentiment. On its daily chart, XRP is technically displaying a traditional falling wedge pattern, which is a pattern that is used to indicate trend reversals and upward breakouts. XRP is testing important resistance at $2.42 right now. A break above this could start a strong rally, perhaps first to the $2.80 range, and then to the $3.40 target. CryptoZard and other analysts are keeping a close eye on this formation, pointing out that in order to maintain bullish momentum, XRP needs to keep support above $2.20. The rally needs to break through resistance zones at about $2.60 and $2.80 in order to confirm its strength. The possibility of an upward breakout is also supported by the Relative Strength Index, RSI, which has increased from 31 to 47, indicating a resuming bullish trend. With regulatory developments creating waves and technicals aligning, XRP may be poised to not only regain previous highs, but also set new ones, especially if institutional investors flood the market after an ETF approval.